Hello, students. How are you all? I hope you are all fine and enjoying the study. Today, we are going to discuss one of the very interesting, very important, and highly utilization in the real life topic that is a IFRS, International Financial Reporting Standard. A very important topic. Now, at this level, we'll discuss basics about the IFRS. What is IFRS? What is a governing body? Why IFRS is required? What is the purpose, objective, what is the process of IFRS implementation, and how it differ with the existing standards, which is called GAAP, generally accepted accounting, generally accepted accounting principles. So in this session we'll discuss basic about the IFRS, though it is absolutely at raw level. Then later part you may have a study on the different IFRSs, each IFRS dealing with the particular accounting policy and how it is being practically utilized in real life. A very important part, but that is a part of the later syllabus. In this part we will have a basic understanding of the IFRS. IFRS basically say every country has a reporting standard. Reporting standards. Reporting. One of the part of the accounting process is communication, reporting. So the basically standards for the reporting. So when a company report its performance financial positions to the shareholders, to the government, to the various stakeholders in the form of financial statement. So this sending the financial information in the form of financial report, financial statement, which consisting of P&L, balance sheet, is called reporting. Now this report, which normally companies send it to the various stakeholders including shareholders, government, bank, financial institutions. So when that information has been sent, it has been sent in the particular format which normally we call P&L balance sheet. This is called format. It includes certain information, financial information, like in the profit and loss account we will have information about the income and expenses, and in balance sheet we have information about the assets and liabilities. So this basically, this two statement, this is called form, and information in that statement is called the content. So to provide rules regulation about the forms and about the content or item of in the financial statement, when it has been properly listed down, it is called reporting standards. In short, you can say standards on reporting. So basically reporting standard is for the financial statement. Generally talk about the form of the financial statement and content of the financial statement. Means फाइनेंशियल स्टेटमेंट का फॉर्मेट कैसा होना चाहिए एंड जो भी आइटम उसमें हम लिखते हैं कौन कौन सी आइटम्स कैसे लिखना है, कौन सी अमाउंट पे लिखना है, क्या वैल्यूएशन रहेगा, वैल्यूएशन प्रोसेस क्या रहेगा, डिफरेंट असेट्स रहेगा, इनकम रिकॉग्नाइजेशन क्या रहेगा, एक्सपेंसेस रिकॉग्नाइजेशन क्या रहेगा. It talk about the different item of income, expenses recognition. It talk about the asset liability recognition, valuation, certain additional information in the form of disclosures. These are the talk in the reporting standards. So basically reporting standard is for the financial statement and mainly talk about the forms and content of the financial statement. Now every country has having their own reporting standards. So like in India we have a reporting standard, it's called accounting standards. In US, they have a reporting standard which is known as US GAAP. Canada, they have a reporting standard. It's called Canadian GAAP. China, there's Chinese accounting standard. So every country has their reporting standard and it's known under different name. It's in India, it's known as accounting standard. US, it's US GAAP, Canadian GAAP, Australian GAAP, UK GAAP. Different countries have the different accounting standards, different reporting standards. So overall, it's called reporting standard. Now, see, every country, as I told you, have their own set of reporting standard. They have their own requirements. But this own requirements sometimes create a genuine problems to the business world. What are the problem and what might have been the solution? If you see, we discussed three practical issues that in the practical and real world business houses facing, and these are the crucial issues. Take an example. Coca-Cola, beverages soft drink company, having its headquarter at its corporate office in US. So you can say their HO is in US, headquarters is in US, corporate office is in US, main corporate office, and they have a subsidiary company. They have a presence in almost every country in the world. Like they have a presence in UK, they have a presence in India, they have a presence in Japan, they have a presence in China. You call the name of the country, they are having presence in this country. So almost every country, Coca-Cola is having the presence. So Coca-Cola head office in US, they have a subsidiary company in the different. UK, they have one subsidiary company. India, they have a Coca-Cola Indian subsidiary company. Japan, they have one subsidiary company. So in every country, for carrying out the operation in a particular country, they have the subsidiary company. So you can say Coca-Cola is having HO in US and having subsidiary companies in the most of the countries in the world. Now, the Coca-Cola is technically is known as a multinational company. What is a multinational company? A company is having head office in a one particular country and having business operation in many countries. So you know many multinational companies. You find so many companies around you having a multinational company. They are having the head office in a one country, having presence in many countries. Like many soft drink company, FMCG companies. Like if you see, there is a Colgate. It's a multinational company. Like Sony, it's a multinational company. Apple. You find so many companies around your real life situation that is a multinational company having its presence, having its business head office in the particular country, having its business operation in many countries. So Coca-Cola is an example of a multinational company. Now, what is the problem? See, at the end of every year, all this subsidiary company present in different countries required to present the financial statement to the respective government agency. Like Coca-Cola in India, Indian operational or Indian subsidiary will require to submit the financial statement, one, to the income tax authority, second to the GST authority, company law, that is the registrar of companies. They require to present the financial statement to the various stock exchanges, governments, bank, financial institutions. They have to require this financial statement submitted to various authorities and to the shareholders. Similarly, when this Coca-Cola subsidiary in UK, they have to prepare the financial statement for the various agencies and authorities in the UK. Now it is a very obvious thing when they're submitting the informations to the UK authorities, UK agencies. Obviously, they prepare the financial statement as per the requirement in UK, that is as per the UK GAAP. When they prepare the financial statement for submitting the various government authorities in India, that financial statement has to be as per the Indian accounting standard. Then for Japan, when they prepare the financial statement, they have to prepare as per the Japanese accounting standard or Japanese UK. And for China, they have to prepare the financial statement which is to be submitted to various Chinese authorities in the Chinese standards. So respective subsidiary, when in their local environment, when they prepare the financial statement, it has to be based on the local reporting standard prevailing in that particular country. So Indian subsidiary prepare it as per the Indian accounting standard, UK subsidiary as per the UK GAAP, Japan as per the Japan GAAP, and China as per the Chinese accounting standard, and they submitted. Now when at the end of the year, along with this, when Coca-Cola as a whole, when they prepare the financial statement and submitted to the various authorities of the US government, US stock exchange, they have also required the financial statement. But when you talk about the Coca-Cola as a whole, its financial statement includes profitability of its HO as well as all the subsidiaries, as well as resources of all the subsidiaries. So when Coca-Cola as a company as a whole, when prepare the financial statement, it consisting of financial statement of all the subsidiaries. So this all the financial statement prepared by subsidiary, this has been sent to Coca-Cola US, and US company US, when they prepare the financial statement, they club all this for an operation and submit it to US various agencies. Now the problem is this financial statement prepared in the respective local reporting standard requirement, whereas when it's submitted to US government, it has to be as per US GAAP. So what Coca-Cola has to do? Coca-Cola has to do, they have to when submitted this financial statement to the, when it is sent to the US Coca-Cola head office, this financial statement simply is not of use. What they have to do, all this financial statement they have to redraft as per the, this has to be redraft as per the US GAAP. So all this financial statement of the subsidiary, they have to redraft. So one, they have prepared as per the respective local reporting standard. Then all this financial statement, again it has to be prepared as per the US GAAP. So here we have taken just 4. But take an example, Coca-Cola is having presence in 100 countries. So their 100 financial statement once prepared as per the local reporting standard, and then again it has to be redraft as per the requirement of the US. So same financial statement they have to prepare twice, which result into one, more time to be consumed, more expenses, because for preparing this financial statement you need to have a professional people, and you need a people with having understanding of the local reporting standard as well as the understanding of the reporting standard of the US. So time consuming process, costly process, and sometimes financial statement is not being a comparable one. So it requires that if there is a common reporting standard between these countries, then things would be easy, because whatever the reports prepared in respective country directly being sent to HO US, and it has been incorporated. So the things which appears and which was a very difficult, time consuming, complicated task would become easy if there is a common set of standards. So that gives birth to the common reporting standards among all, and that call for the reporting standard which is common and used by all, which is known now as International Financial Reporting Standards, a reporting standard which is accepted by 149 countries across the globe. Our India is one of the member country of that, so it is now International Financial Reporting Standard. Now, if it is applicable to all this, then task would be simple. It is prepared by all the subsidiary company, and simply it has been sent to the HO. HO will use it directly. No need to have change it in from base. Only a minor adjustment needs to be made. So that is a need for the reporting standard which is applicable to all the country, or it is a common standard between the many countries. Take another example, like TCS, Tata Consultancy Limited, has borrowed the money. They have taken the loan from the, say for example, one from the US bank, one from the UK bank, and one from the Japan government. Now TCS, as they have borrowed the money from these people, and as per the agreement, they have to submit their financial statement to the various lenders. Now, when TCS prepare the financial statement, it is prepared as per the Indian accounting standard. But that financial statement, which is prepared based on Indian accounting standard, is of no use to the US bank, because US bank don't understand the Indian standard. They use the US GAAP. Whatever the information they use, whatever information they further pass on to the various authorities, it has to be in US GAAP. So TCS, when they prepare the financial statement for Indian authorities, for Indian government agencies, it has to be as per the Indian accounting standard. But when they send it to the US bank, it has to be as per the US GAAP. So this financial statement, which was prepared as per Indian accounting standard, when it's sent to US, it has to be redraft. It has to be redraft as per the US GAAP. When this financial statement sent to UK bank, it has to be redraft as per the UK GAAP. And when it is sent to Japan government, it has to be as per the redraft as per the Japanese bank, Japanese accounting standard, that is Japanese UK US GAAP. So the same financial statement has to be prepared 3 more times. One for Indian government authorities, Indian stakeholders, as per the Indian accounting standard, and then it is to be redraft in UK GAAP for sending to the UK bank, redraft to US GAAP for sending to the US bank, and for redraft into the Japanese GAAP for sending to the Japanese government. So the same financial statement they have to prepare thrice more. So it results into the time consumption, more efforts, more expenses, and understandability, comparability. Take another example. So Reliance Industries has listed its shares into 3 stock exchange. Apart from Indian stock exchange, they have listed their securities on the US stock exchange, London stock exchange, Japanese stock exchange. As per the listing agreement, they are required to submit their financial statement to the respective stock exchange. See, when Reliance prepared the financial statement for Indian stock exchange, Indian government authorities and agencies, it is to be prepared as per the Indian accounting standard, based on Indian standard. But when it's submitted to the London stock, US stock exchange, this financial statement needs to be redraft as per the US GAAP. When it's given to London, it has to be redraft to US UK GAAP, and for when it's Japan, it's a Japan GAAP. So this financial statement which they have prepared, it has to be redraft for separately for US, UK, and Japan. This I take the only 3 example. This example might have the different amount of the banks, stock exchanges. So one company has to prepare their financial statement set for the number of US GAAP, which is a very time consuming, very difficult, very complex process, and highly expensive task to be performed. To eliminate this, need arise to have a common accounting standard across the globe, across the different countries, so that everyone have a same language of reporting, and it is to be understood by everyone easily, and it can be submitted to the different country authorities, different stock exchanges, and they can understand it. And that is a need for accounting standards. So this IFRS is basically known as International Financial Reporting Standard. It is issued by IFRS Foundation and International Accounting Standard Board, IASB, International Accounting Standard Board, and IFRS Foundation. So what is the IFRS? It's a set of rules and guidelines for the financial statement preparation. So remember one important thing, that IFRS has not of a much role to play for the accounting, bookkeeping. Basically it is for the financial statement. So it provides the set of rules and guidelines for financial statement preparation. It ensures the transparency and creditability of the financial statement. Transparency means whatever the communicator wants to communicate, it has been properly being communicated. Everyone using the financial statement, they get all the relevant information as per their requirement. And because everything is available at true and fair view, correct, so the creditability of the financial statement and accounting system as a whole has been improved. It ensured uniformity in the financial statement across the firm, segment, and nation. So where the financial statement prepare, it has to be prepared on a common basis. So it is comparable. It is possible to compare a financial statement prepared by the different firms, forming the different segments and forming the different nations. It is comparable because of the global language, global reporting standards. So it ensures uniformity. What are the key features of the IFRS? The key features are: first, relevance. It provides the relevant, useful informations to the users. So all the information available in the financial statements are highly relevant, so that users can take the proper economic informed decision. Faithful representation. All the information provided in the financial statement are without any bias, and it is based on common rules and regulations. Comparability. When because of the IFRS, it is possible to compare two financial statement of the different firm and two financial statement of the same firm over a period of time. So comparison is possible. Verifiability. A user of the financial statement can properly being assess the financial information, and because of the it's all the rules and regulations, financial statement is being prepared in the proper time pattern. And the most key important feature is the understandability. The information form and the content in which a financial statement is being prepared, it is possible for every common layman to understand the financial information available in the financial statement. Then what are the need for IFRS? The need for IFRS, it is a single set of financial statement around the world. So because it's global acceptance and rules and regulation globally, it provide the financial statement which is acceptable globally around the world. It reduces the time, efforts, and expenses of preparation of the financial statement. It is easier to monitor and control the subsidiaries. HO can properly be monitor the subsidiary, because whatever the financial statement prepare, HO can easily assess on a timely basis, on a real-time basis, so they can have a proper decision making, controlling. And it is easier for all the companies to do business in a foreign countries, because now it is possible that every company who's having a presence in different countries are able to understand the information financial statement provided by the different countries financial operations. Improve the rates of foreign direct investment. As the doing business is easy, understanding the business is easy, so more and more people involved in the cross-border business activities, so foreign direct investment also improve, and it improve the understandability also. Principal objective of IFRS. What are the principal objective of IFRS? First, it establishes a universal language for the companies to prepare the accounting statement. It establishes the universal language. Universal language is that the language of the information communication which everyone understands, as the reporting standard applicable to many countries. So everyone who is having the presence in the different countries would be able to understand the financial statement prepared by any organization present in different countries. To establish accounting rules to make it easier for the stakeholder to interpret financial statement irrespective of business location. So now it's possible that a person in India investing in the US company, they'll be able to understand the information provided by the US company, because the rules and regulations for preparing the financial statement, what is applicable in the US is also applicable in India because of the IFRS. Even a person in India having investment in the UK company, they are able to understand the financial statement provided by the UK company because of the IFRS. Then make the accounting statement credible and transparent. So because of this, accounting statement, financial statement prepared on the basis of IFRS is more transparent. So all information is easily available, nothing's to be hidden one, and it creates more credibility and make international comparison analysis at easy task. Because of this international analysis, because now anyone in any part of the world can understand the financial statement prepared by any company across the globe. Adoption process of IFRS. When any company adopt the IFRS, first time when they go for that, it's first time when they implement, it's called adoption. So when IFRS being implemented first time, it's a very important, certain important things to be considered. So it's called adoption process. Adoption process include first, when IFRS is being implemented, it has to be a task, because it's a task consisting of number of activities, so necessary and desirable to have one internal team, group of people who has been assigned the task for the adoption of IFRS. Because see, important thing is there is an existing set of standard, new set of standard. Team has to understand both the things. They have to identify the difference, they have to identify what is the impact on present accounting system, they have to identify what will be the process. So there has to be internal team, and the team has to be given a certain task. So the job of the team is to understand the IFRS, understand the existing system, its impact on accounting procedures, valuation process, etc. Then next, to get the board of directors support. See, when such an important task is to be performed, it has to be supported by the top management approval. So IFRS implementation process, necessary approval from the board of director has to be obtained, because it will going to affect a communication pattern, it will going to affect the valuation process, accounting process, reporting standards. So necessary support from the top management needs to be there. Now, form of an adoption team. Adoption team includes number of people from different part of the organization, like accounting, finance. There has to be people from accounting, finance, because the major task which is being affected by the IFRS implementation is definitely accounting and reporting from the various finance field. IT person needs to be there who understand the technical things, because it affect the reporting pattern also. It should include the HR person, because of the IFRS a new technical people has to be employed, so and plus training process will be then. So HR department should be in the part. Then company operation, necessary technical part, engineers of the company should be involved, because this IFRS have involved some valuation process where assets to be valued, which may include plant, machinery, furniture, where technical knowledge is required. So engineering team members should be there. And the job of the team training. See, specific importance is that because of the new system, people involved in that needs to be properly trained. They have to be trained for the relevant new standards, what its impact on the existing standard, how the things has been changed. So proper training should be there, and there has to be some external auditor who evaluate the task performed by all these people. They will evaluate, they will advise some changes, they will rectify if at all any mistake. This is the adoption process of the IFRS. And one more important thing is, you need to have some consultants, you need to hire some expert people who help you to do this process. Now, difference between the IFRS, Indian GAAP. Indian GAAP is nothing but it's presently we call it accounting, Indian accounting standards. So what is the difference between IFRS? There are different points where there is a difference between IFRS and Indian GAAP. One is a full form. First, IFRS is known as the International Financial Reporting Standard. Indian GAAP is known as a Generally Accepted Accounting Principles, GAAP. Then IFRS developed by IASB, International Accounting Standard Board, and this Indian GAAP, Indian Accounting Standard, has been developed by the Ministry of Company Affairs, MCA. Then adopted, this IFRS is adopted by more than 110 countries. GAAP is adopted only by Indian companies. Indian GAAP is adopted Indian companies. UK GAAP is adopted UK companies. US GAAP is adopted by US companies. Instructions on adoption. IFRS 1 provide clear instruction about how to adopt the IFRS. In IFRS, there is a separate IFRS 1 which deal with the or providing the guideline for adoption of accounting standards for IFRS first time. Whereas in Indian accounting standard, there is no specific adoption process. Exemption, there is no exemption for cash flow statement in IFRS, but there is an exemption of cash flow for the SMEs in the Indian GAAP. Balance sheet, IFRS has a comprehensive balance sheet structure content, whereas there is no particular format for the balance sheet in the GAAP. So these are the principal difference in IFRS and Indian GAAP or accounting standard. So this is all about the basics of IFRS. Thank you very much. We have all the lectures on graduation, be it is a Sem-1, Sem-2, Sem-3, and even on the BBA on the channel The Lecturer. So I request all you to subscribe the channel so that you get a regular notification update on various lectures we will upload on this channel. This channel is specifically for the college students, and all the lectures are basically prepared and recorded by the professional people. So you'll get all the detailed informations about your study for the college preparations available on this. So do subscribe on the channel. Thank you so much. Wish you all the best. Thank you.